morning, everyone. That's Mike. Can you hear me? Okay. Thank you so much for giving us the chance to present to you again. Thanks for your support also for those who are long-time customers. Okay, today I'll bring you through the market outlook for the second half of 2026, sailing through turbulence. My aim is to just give you a bird's eye view of where we are and where we stand in the global economy. And also just a bit of a snapshot on where we think the opportunities and risks lie for the second half of the year ahead. Okay, so just to start off with a bit of recap, don't mind if you can't see the words, they're a bit small, but basically just to show you that for the first half of this year, markets have been very strong in the North Asia side, with Korea, Taiwan and Japan doing between 30, 40, even 50% due to the AI boom. Unfortunately, the underperformers were mostly in the ASEAN side, with actually Hong Kong, Indonesia, and India underperforming. Okay, let's go into the major economies of the world first, US, China and Europe, before we talk about Malaysia. So I'll also share a bit more on where we think Malaysia will be in the second half, but let's start at the US because US determines the direction of the global landscape. So overall growth in the US still remains quite strong. For such a large and mature economy, 2% we deem it as quite a reasonable growth rate. And this is mainly driven by the infrastructure and tech cycle in the US. So if you look at the chart on the right here, it shows you that a lot of it is driven by actually tech investments in the US, which actually picked up a lot, the data center investments. And this has actually been leading the GDP numbers. Of course, another key focus for markets is where the interest rates in the US lie. As we all know, the US dollar is the reserve currency of the world. So where the interest rates in the US will determine the global liquidity conditions. That's why everyone always talks about interest rates in the US and not Europe or not China, because US dollar is the global reserve currency. So for US, I think they went through a cutting cycle last year. There was 75 basis points of interest rate cuts in 2025. But this year, the Fed has remained on hold. And that's because I think they have commented that there is a slight risk to inflation as well. So they're actually monitoring the situation. So we also got a new Fed chair, Kevin Walsh. And I think what his main message is that he will take a cautious approach first. So I think the market expects maybe one hike, although I think this is still quite highly debated. There could be between 0 to 1 to 1. I mean, there's some people even saying 2, but I do think that's tall order. Probably I think we're looking at rates holding steady. So if rates hold steady, I think this will be neutral for the economy and the stock market especially. And I think expect to be supportive ahead of the midterm elections. So overall, just in Europe, very quickly, for Europe, I think it's quite steady there. Nothing much to be excited about as well. I think in terms of growth, I think it's 1.5%, 1 to 1.5% kind of range. And as for the inflation also start to creep up a bit towards 3%, and that's why we saw actually the ECB hike interest rates in Europe. So in China, I think another key market, second largest economy in the world, but unfortunately China we think remains stuck in a deflationary trap. I think just now Chun Hong mentioned that property I think is still in a downturn, and if you look at that chart on the right there, it shows that real estate development in the red color line still continues to decline even in 2026. I think there's been a massive overbuild of property in the last 2-3 years, and now China is facing demographics crisis. They're in a debt crisis, and I think still digging their way out. I think the positive thing is that we see some signs of bottoming, but for it to actually turn around, I think it will still take some time. I think overall GDP growth is still pretty stable, about 4.5 to 5%. I think driven mainly by the actually manufacturing sector. So the one sector in China that's still doing well is manufacturing. So if you look at the chart on the right, the dark blue line, it shows you that manufacturing and exports are actually still doing well. So as you can see, China is still the global economy's export powerhouse. Other than EVs, we see consumer electronics, appliances, and they're also fast becoming a robotics powerhouse as well. So there are areas of opportunities to invest in China, despite the ongoing property downturn, which I will talk a bit about later as well. And of course, the key question, posed by FSM, is tech a bubble? So we see that tech has gone up a lot. But we do think that this actually growth in tech is actually structural. I think if you talk about the growth in tech, it reminds me a lot about the previous cycles that we went through. So I think the last 100 years there's been wave of technological innovation. In the 1990s, we saw the rise of the PC. Then we saw the rise of the smartphone. We saw the rise of cloud computing as well. And I think AI is one of the key structural trends that will drive growth for many years to come as well. And I think we are in the third year since ChatGPT launched in I think November 2023. But I think this is a key moment in time as well. And one of the key questions people ask when people ask me, is this a bubble, is to look at the earnings growth. So if you look at the chart on the left here, key index earnings per share, EPS, versus the PE, you can see in the blue line that actually the EPS has moved up a lot. So the companies have actually earning more. So this boom is actually driven by earnings. If you look at the PE in the red line, it's actually been flattish. So the PE actually has even declined slightly since 2021, which is a strong indication that this has quite strong fundamental underpinnings. Whereas if you talk to me about the tech bubble, the Nasdaq bubble in the year 2000, that was when the PE actually skyrocketed. So a lot of companies that didn't have earnings, a lot of .com companies that didn't even make money, but they were valued at, let's say, 100 times sales and so on. Now, this is not to say that there's no areas in the market that there could be mini bubbles, there could be stocks that are overvalued, right? But on the market overall, we see that the S&P 500 earnings have increased a lot. And the bottom part is the US growth stocks, which is even more obvious that actually the earnings have increased by manyfold, right? And if you look at the chart on the right, it just shows you where some of the growth areas are in tech, and which is why a lot of the Asian companies have benefited as well. Because in tech, a lot of the spending is the GPUs, which is used to process AI. There's a lot of growth in the memory as well, HBM and DRAM. And there's also a lot of growth in the CPU, and the rest are all the other areas of connectivity. Now, we could go spend the whole day talking about all the technical details, but of course, this is not the purpose of the talk. But just to show you that there are many areas, very exciting areas of opportunity on investing. And a lot of the companies that actually supply these areas are actually based in Asia, which is why you see that a lot of the Asia funds have done very well this year, companies in Taiwan and Korea. So let's look at also some comparison with past cycles. In the 1970s, we had the gold price boom. In the 1980s, we had the Japan boom, where everyone was talking about Japan. If you're old enough, you remember. People were thinking that Japan will be the #1 country in the world. Then we had the Nasdaq tech bubble, .com bubble, commodity bubble. But if you look at where we are in terms of the S&P 500 IT, the forward PE, it actually, although it has gone up, but it's actually nowhere near the bubble territories of the past cycles yet. Again, this is not to say that certain stocks might be overvalued. There could be corrections and sharp corrections here and there. But on an overall basis, it is still quite moderate compared to past cycles. So what is our global market strategy in this case? So for the US, I think we still remain positive. We still see quite decent growth there, supported by increased tech investment spending. The economy overall is also supported by tax cuts, deregulation, and fiscal spending ahead of the midterm elections. In terms of the Fed policy, we see on pause, but we think that it could be neutral to the market. They probably might not hike, or maybe there's only one hike. Still okay for the stock market. And AI thematic remains a key driver of equities. So we are more selective with a bottom-up focus. We like tech and industrials. For Asia, I think China, we must be very selective. We are still negative on the old economy stocks. We like new economy sector like tech, semiconductor, internet, battery stocks. Korea and Taiwan, I think, is all about AI, so it's more about selecting the respective winners, that provide the supply chain. For ASEAN, we're a bit more defensive. Still prefer Singapore and Malaysia, in light of the global uncertainties. Okay, so let's talk about Malaysia a bit closer to home. What is our strategy here, and what's the economic overview? So for this year, I think growth will moderate a little bit. Although first quarter was quite strong, about 5%, but overall we expect growth to come in about 4.6%. Of course, BNM's range 4 to 5% is very wide, but given they were not sure how the war in the Middle East will be resolved. But looking at where we are, I think we'll probably come in closer towards the high end of the range, 4.5, 4.6, 4.7. So I think overall, our country is still doing pretty well. In terms of fiscal position, now this could be the part where there could be a bit of slippage here because of the rise in the fuel subsidy spending. So I think the budget deficit could actually increase ahead of their 3.5% target. So I think the government subsidy bill due to the Middle Eastern crisis has actually increased to 7.5 billion in April, although it's come down to 3.5 in May. I think where we are doing well is in the export area. So as you know, Malaysia is also a key exporting country, especially in E&E, and the AI boom has contributed slightly to our exports as well. Although maybe not as great as Korea and Taiwan, but at least we do participate a little bit in the E&E side. And also in commodities, in terms of oil, palm oil, I think we still do benefit there. In terms of inflation, I think it's still under control. 2026 CPI 1.5 to 2.5% within the normal range. I think for Bank Negara, they have remained on pause. Some people are saying there could be one hike, but I think as long as the oil prices cool down, I think there could be quite a decent chance that interest rates remain unchanged as well. Okay, what are some of the key areas to invest in? I think it's still the data center infra project rollout. I mean, we have mentioned this in our previous presentations also in the start of the year and last year as well. But I think this continues, and actually the pipeline does flow down into the smaller M&E contractors that are doing this data center construction. So I think actual data center utilization is still only about 1.5 gigawatts, and there are 36 projects that has been completed, and an additional 3.8 gigawatts that are currently under construction. So I think the pipeline is still very strong, and next few years we'll still see a lot of data centers come online. And there are also a lot of key infrastructure projects that are still coming up. And another sector that we can look at in Malaysia is also the new energy sector. So I think with the Middle Eastern crisis, it's all the more important that we invest in alternative energy. And this includes solar. I think recently the LSS 5 Plus was rolled out, benefiting certain contractors in the space as well. LSS 6, they're talking about 2 gigawatt as well. And also, I think certain hydro projects that are coming up. Of course, it will not be complete without talking about the election as well. So I think, today is the Johor elections, and after that we'll see Negeri Sembilan. So I think this would actually give some direction as into when the election will be called. So I think for now the base case, if the Johor and Negeri Sembilan then goes sort of status quo as planned, then I think it's more likely that the general election is next year. But there could be a small chance that if there's a strong showing by BN in Johor and Negeri Sembilan, then they could push for early elections, although that's not the base case at the moment. So with elections next year, I think this year the government will still focus on pump priming the market and the economy. So what is our strategy in Malaysia? So I think we did expect higher volatility due to the Middle Eastern conflict and some supply disruptions. So we have realigned the portfolio a little bit. So we focus on areas of growth, like I mentioned just now. So the data center side, hyperscalers, meaning the big US companies, continue to invest in Malaysia, driving the construction on the data center and fit out spend. Number two, we also like utilities and renewable energy, which is a multi-year theme of diversifying away from fossil fuels into new energy. We also like the export sector, which is more insulated from domestic cost pressures, like oil and gas, plantation, that will benefit regardless of the cost pressures here. We also selective on corporate exercise. There's been IPOs that come up, M&A, and also companies doing REITs to unlock value. So we focus on bottom-up stock picking for Malaysia as well. Okay, so that ends my Malaysia side. So just to walk you through a bit of our fund selections. So just to introduce you, if you have not seen some of the key funds that we have here on offer at Kenanga. So for Malaysia, these are the top the number 1 to number 4 funds, Kenanga Growth Fund, the Sharia Growth Fund, Blue Chip and Growth Opportunities. And Malaysia Inc. and Growth Fund Series 2 are actually a mix between Malaysia 70% and 30% regional. And we also have actually foreign funds to offer as well. So we have the Asia Pacific Total Return Fund, the Islamic Asia Pac Fund. We also have global funds, which is the Global Growth Fund and Global Islamic Fund, and the last two are our bond funds as well. So of course, a lot of people look at the year to date or 1 year, but unit trust is long-term investment. So I hope that you look at the long-term performance, which has been quite good as well. Although this year foreign is doing better than Malaysia, but there are some years where Malaysia do better than foreign. So it's always good to have a diversified portfolio. Okay, so therein ends my presentation. Thank you so much for your time.